The UK consumer market really is on its knees at the moment. The cost of living crisis has really affected the availability of discretionary spend. We've seen a whole host of high-profile bankruptcies and business failures. It really is a tough time, but there is also an opportunity, as always with these things. Businesses that are going to succeed in consumer are really moving away from what we've seen over the last few years, which has been very much focused around e-commerce and growing at all costs. A lot of e-commerce businesses have benefited from an artificially low customer acquisition cost brought about by the COVID pandemic. They thought the good times were here to stay and built their business models around this artificially low CAC. That's no longer there. In many cases, it's tripled, even quintupled, and those business models are pretty much dead. But what is going to succeed is businesses that have real brand value. Across healthcare, on the other hand, this is a super resilient sector. It always has been, very much driven by government spend, particularly in the UK market, but across most European markets in any case. Even at times of heightened inflation and consumer uncertainty, healthcare always succeeds. Technology we see huge opportunities in. There is a vast bilateral M&A channel between Northern Europe and the United States for high-quality technology businesses. We've seen valuations dip slightly as a result of the increased cost of debt, but appetite remains the same, and we're seeing very, very healthy ARR multiples for these companies. Business services is an all-encompassing term and covers all sorts of businesses. These have very much been in demand over the last few years, and we expect this to continue, particularly around areas such as environmental consultancy and white-collar services. Private equity have started showing a real interest in these sort of businesses. There's been a lot of roll-ups amongst accountancy firms, for example, but any sort of businesses that are providing a critical service, particularly if it relates to something that has a real underlying tailwind, like clean energy transition, then those businesses are very much in demand at the moment. This year, we're going to see the reoccurrence of a theme that we've seen over multiple years, which is really driven by political uncertainty. Lots of entrepreneurial businesses are scared of what's going to happen to entrepreneurs' relief in the UK market. With an upcoming election, this will really come to the forefront. There is an expectation that Labour will remove this all-important tax relief. Businesses will have to sell for much higher prices to get the same proceeds. And this is going to be at the forefront of entrepreneurs' minds and has been for several years now. The economic situation in the UK is and continues to be uncertain. Inflation is the highest across the economies of Europe. This is largely a self-made problem through Brexit. It is particularly affecting the consumer sector, but in terms of overall M&A activity, particularly in the mid-market, this is actually not as subdued as it is in many other economies. UK M&A activity has been very, very resilient, and largely this has been driven by the huge amounts of private equity dry powder available through the mid-market funds having raised new and larger funds over the last couple of years when the going was still good. The private equity model means that they have to get this capital to work. The only impact we're going to see is on slightly lowered valuations, as the cost of debt means that the private equity funds can't pay the same multiples they were paying previously.